Margie Patel, one stock you like over at Wells Fargo Funds is Estee Lauder. Stock's up, I think, around about 9 or 10% so far this year. We got Black Friday next week. Will Estee Lauder be a big winner?
I think it'll hold its own. I look at it as a long-term grower. They've been great as far as innovating, developing new products, new skincare products, and acquiring new brands that keep a certain freshness. And even though they have a lot of exposure in emerging markets like China, I think the demand for their products, for the quality products, will keep the sales moving along. And they've done a great job operationally too.
And you also like Medtronic. And speaking of new products, they now have an app where you can get a reading from your pacemaker, so the technology is advancing steadily. Stock's advancing, it's up around 6% year to date.
Yes.
So what takes it higher?
Well, I think just continuing demand for products related to the heart, primarily cardio products, as the population grows and ages. And again, they keep innovating, developing new products, new uses, things like that. So I think they have a more certain future than many parts of the healthcare market. And they pay a decent dividend too.
All right, well, you like Danaher. Now, Danaher is going to be splitting in the new year between its life sciences division and its test and measurement division. Stock's up over 10% year to date. So why don't you talk about Danaher, why you want to get in now ahead of this split?
Well, I think that it's a good grower. I think that, to me, the split will mean you'll get both halves of the companies. And often when a company splits, even the less desirable part often does surprisingly well because it attracts a new category of buyer.
All right, and then finally, Sempra Energy. Stock's down double digits. A lot of energy companies have had problems this year, of course, with oil and natural gas prices low. So what turned Sempra around? Why do you like it? I guess maybe you like that 2.5% yield, which is pretty nice while you're waiting.
Well, it has a good yield. Also, the bulk of its earnings come from their regulated utility business, which is steady and gradually growing. They get to make a return on capital from additional capital projects that they use. And they do have the midstream part of the business, which will give it above average growth. That's part of the non-regulated. And it's interesting because although it's primarily utility, it seems to trade as if it's an energy company, as if it's a midstream company. So I think right now it's down because, one, a lot of people don't like utilities, and two, it is sensitive to oil, even though there isn't really a driver of their earnings or revenue. So I think it's a good value play here.
All right, well, thanks a lot, Margie.
Thank you.
And thank you for watching The Street.